Hello, this is John Piper with the weekend video clip. I think I'll do a normal report today, but it's quite late on Friday. The market's already closed. The 6-hour time difference is a bit of an issue actually in Costa Rica, but not much to do with that at the moment. I do promise though to do either a pre-opening report or a written report for Tuesday's report, so you will get one next week. Right, the pattern here is fairly clear. We've got a very clear 5-wave decline here. 1, 2, 3, 4, 5. Now, I'm counting that at the moment as the final part of the previous decline. That's not certain, but it is possible. We've then got a 1, a 2, 1, 2, 3. So the 3 subdivides into 5. Then you've got a 4 and a 5. So that's clear. That's a clear ABC. Now got a solid churn up there. A, B. Now we've had this spike come in, so stopped us out of our position. Unfortunately, the last thing we want to do is be stopped by a spike, which is why acceptance is so useful. But of course, you can't use acceptance when you're not looking at the market. You need to stop in the market as well. This could be an important low. We could now see the third wave come in. So right now, I'm going to wait and see how things develop. I mean, the actual bounce off that spike is not that dramatic right now. As you can see from this chart here, this is the 10-minute chart. So we've got the move there. I mean, that could be a fourth in there. We don't really know. That's a clear ABC, which is why I thought we had seen the low. Also, of course, in terms of time, that pullback is in good relationship to this advance. The pullback we've now got is obviously a lot more extended, going over 3 sessions, so it does question thing anyway, but we have got the spike, and now we're sort of out of hours, so it's difficult to know, but certainly come Monday, if we see some decent action, I'll be going long again for this market. I think at this point in time, I've got some positions on silver, on the gold miners have not done much either, so again, there's no backup to the spike at the moment. There's no backup on gold either. I mean, the blip up is not of huge importance at this point in time, but it's encouraging. We need a lot of encouragement on gold at the moment. I look at the DAX now. We had this huge gyration yesterday. I think there was a statement that Dargy, I can't even pronounce that, but the guy, European chap, made a statement that nothing much to be done this year. Apparently, this was very disappointing to the extent that the DAX, initially it rallied, and went above 10,080 and fell back 200 points down to there. It looks to me like kind of a stop hunting situation. I mean, it looks like it's just a shakeout because clearly the news wasn't that dreadful, but it must fit a lot of stops. I mean, there's a saying that stops are either too close or too far away. This kind of action does rather illustrate this. I mean, obviously, if you have a stop in place, if you're long with the stops in place, then you ideally want the stop to be very, very close, so you don't actually lose out. Because wherever else your stop was, you've probably been hit. I mean, a 200-point move is quite dramatic, unless you take a very long-term stance. So if your stop was down here, it'd be too far away because obviously you want to be stopped up over here. And I mean, gold's example where our stop was too tight in effect because we didn't know that spike was coming in, but we got stopped out just when we didn't really want to get stopped out. But the market has now moved up again, so yet again we're making new highs, not by much at this point in time. I'll just check that actually. Yes, the high here is at 83 and the high here is at 93, so hardly dramatic, but it's still making new highs. Looking at the hourly chart, we now have a 1, 2, 3 to there. I mean, there's a very brief 4 perhaps, and this could be a 5th. So again, if we see a move of equivalent length to that, which came in around just below 9.2 up to 9.5, something about 350 points thereabouts, then off this peak here, which is 9.8, that's 9.850 thereabouts. So that would leave us about 10,200 or thereabouts. Anyway, but again, we're in the Christmas period now. We've got December expiry 2 weeks' time, so Christmas itself is about the same, not too much beyond that, 3 weeks' time, I guess. So I think 10,200 is probably a good target for some kind of peak. January is a time when you can see the hangover come in, certainly overdue in these markets, but I would still expect things to go up into the new year. Alright, FTSE no change, we're still going up, but it's a very sluggish affair, so we've got like a 1, 2 I guess, so we could see some kind of third wave, but so far not much sign of that. But again, we're looking positive rather than negative. Just on the Dow, we've got these sort of spike lows, so again we're going higher here. possible 1, 2, 3 here. Again, this Christmas period, we like to see fairly quiet action, but we are going to go higher, I think. Nikkei Dow, we're still long here. So now almost 8,000 points up on the original position. 1, 2, 3, 4, 5 maybe. That could be a 1, 2. So again, we're in the third wave here. Had this very subnormal decline following the massive great rally we had up from below 10,000. So again, looking positive there. Okay, that's all for today. If you found it interesting and useful, I'll be back with a report on Tuesday morning. That may be a pre-opening report, so it may come in on Monday evening. Let's see how that develops, but certainly I'd say it'll be a written report for those of you who want those. Great, have a great weekend. Thanks for listening, and bye for now.